Hi there, Matambo here. So today we'll be discussing question 2, which comes from National Income Accounting. The question is, use the following information to answer the questions that follow. Alright, and then we'll be given this data. So consumption is equal to 480 plus 0.5 YD. Then investment is equal to 110. Taxes are equal to 70. Government expenditure is 250 euros in this case. So I'm using euros as the unit. Then question 1, solve for the goods market equilibrium. Okay, so solve for the goods market equilibrium. So what we know is that the goods market equilibrium Y must be equal to total demand Z, right? And therefore our Y is equal to consumption plus investment plus government expenditure, since we are dealing with a closed economy. So we're just going to have these three variables: consumption, investment, and government expenditure, right? And this consumption, right, our consumption is equal to A plus BYD, where A is the autonomous consumption. So that autonomous consumption, and our B here is what is called the marginal propensity to consume. And then the last part there, the YD, this guy is what is called disposable income. Okay, now this autonomous consumption, our A, just measures the level of consumption at zero income, meaning that when your income is zero, that level of consumption that you're going to be experiencing is what is called the autonomous consumption. And then the B, which is the marginal propensity to consume, just measures the proportion of every increase in income that is going to be dedicated to consumption, right? And then the YD here, the disposable income, is just the after-tax income. All right. And then so using this information that we've been given here, okay, can we calculate the equilibrium output, which is the goods market equilibrium? Okay, so can we solve for the goods market equilibrium? Yes, we can. Okay, because we know that our Y is equal to C, and our consumption in this case has been given to equal 480 plus 50% of disposable income, which is 0.5 YD. And then we've got investment, which is equal to 110. Then we've got government expenditure, which is equal to 250. Okay, 250 there. So therefore our Y is equal to 480, where the 480 is our autonomous consumption, plus 0.5. This YD is Y minus T, tax. Okay, when you put the 110 plus the 250, therefore our Y is just going to be equal to 480 plus we can open the brackets, so 0.5 Y minus 0.5 T, but I think we've been told in the question that T is equal to 70, which means that this will just be 0.5 of 70, and then plus 110 plus the 250, like this. Okay, so now our next step is to get the autonomous expenditure. Okay, by summing up the 480, this 480, then we say minus, okay, so 480 minus 0.5 of 70, where 70 is our tax. Okay, then we add 110, then we also add the 250 there. Okay, okay, so this is going to give us 805, okay, plus 0.5 Y, right? Then what we want is to make Y the subject of the formula, because we want to find the equilibrium level of output, which is y in this case. So we can get this 0.5y, we take it the other side, so y minus 0.5y, this will give us our 805. Okay, then y minus 0.5y, this will just give us 0.5y is equal to 805. Therefore, dividing both sides by 0.5, this will give us a y to be equal to 1 over 0.5 multiplied by 805. Okay, which means that our equilibrium level of output y is just 1610. Okay, so 1610 euros. So this is our equilibrium level of output, which is the goods market equilibrium as a 1610, sorry, right? Yeah, so that's for part A. And then part B is saying find the equilibrium disposable income, YD. Alright, find the equilibrium disposable income. So what we know is that disposable income, disposable income is nothing but the amount of money that is going to remain after tax deductions. Okay, so it is our YD, which is just y minus t. Okay, and our y is what we're just from finding the 1610. Then we remove the tax, which is 70. Okay, so 1610 minus 70, we're going to find the 1540 euros, meaning that our disposable income is 1540 euros. What does this mean? It means that from the gross income of 1610, after removing taxes, we're going to have our disposable income, which is equal to 1540 euros. Okay, and then for part C it's saying find the equilibrium consumption. So we've been given the function for consumption, which is 480 plus 0.5 of YD. Okay, so our C is just going to be 480 plus 50% of, we're just from calculating the value of YD, which is our disposable income, the 1540 there. Okay, so can we get 50% of that? Therefore our C is 480 plus, so 50% of 1540 is 770. Okay, meaning that our consumption is the sum of the two. So plus that, this is giving me 1250 euros. Okay, 1250 euros, meaning that this is our equilibrium level of consumption. Okay, so that is our equilibrium level of consumption. And then part D is saying calculate the private savings, public savings, and investment spending. Okay, so calculate private savings. So we know that the private savings, okay, what is private savings? Private savings is just the amount of income that is going to remain after consumption. Okay, so it's just the amount of income that is going to remain after consumption. So it's more like after consumption income. All right, so this is equal to, so private savings is equal to amount of income minus consumption. Okay, so it's the amount of income minus consumption. Now our equilibrium income is the 1610 minus the level of consumption is 1250. Okay, right, so can we get the difference there? She's giving me private savings equal to 360 euros. Okay, 360 euros. Okay, so this is our private savings. Okay, and then for public savings, so public savings This one is just amount of income that is going to remain after the government has done its expenses from its revenue. Okay, so therefore public savings would just be equal to government revenue, which is taxes, minus its expenditure. Okay, so taxes are equal to 70 minus, we've been told that government expenditure is 250. Okay, so to be that less 250, so this is actually a deficit. Okay, because so we have got the minus 180, which is a deficit. Why is it a deficit? It is a deficit because the government is spending more than the total amount of its revenue. Okay, so I'm going to have minus 180 euros there, as the public savings. In short, it's not saving anymore. Okay, because it's negative. Okay, it's negative. Okay, yeah, all right. So we've got that. I'll just pause for a second. I want to attend to something. Okay, yeah, and then to get investment, we know that investment, when the economy is in equilibrium, right, investment should be equal to total national savings. Why? Because it is after people have saved that investors will follow those banks and get that money and use it for investment, right? So investment should be equal to national savings, and national savings is equal to private plus public. Okay, so remember we calculated the value for private savings, which we said it's 360, this guy over here. So therefore to get the value of savings, we'll just add the 360 plus the negative 180 for public. Okay, so therefore total national savings is equal to 180 euros. Okay, and I think we can show that this is the value for our total investment. Why? Because savings come from public and private. Add them together, put them together. So therefore that will give us the level of national savings as 180. Okay, then question E, it's saying calculate the multiplier. Okay, so E, I'm on the other side. Calculate the multiplier. So you know that our multiplier is just 1 over the marginal propensity to save. Okay, and since we've been given the MPC as 0.5, it means that the MPS is 0.5 as well, because we know that the sum of MPC and MPS should be equal to 1. So if I've got the MPC as 0.5 plus MPS is equal to 1, then MPS is equal to 1 minus 0.5. Therefore our propensity to save is 0.5, meaning that our multiplier here will just be 1 over 0.5, right? So 1 divided by 0.5, you are going to get a 2. Okay, so our multiplier is 2, but the question is saying find the multiplier and explain how it affects equilibrium, right? So find the multiplier and explain how it affects the equilibrium. So primarily what the multiplier does is, let's say if there is a unit change in any of the variables that affects output, then the impact of this 1 unit change on equilibrium output will be twice the effect of that change. Okay, so for instance, let's say there is an increase in government expenditure, let's say by 50 billion euros, 50 billion euros, right? Then it shows that the change in y, the impact of this 50 billion increase in government expenditure on y will be twice the 50. Okay, why? Because our multiplier is 2, so it will be 2 times the 50. Okay, so what the multiplier does is just it shows the impact of a unit change on equilibrium output. So if the multiplier is 2, then it shows that when there's a 1 unit increase or a change in any of the variables that affects our output, then the impact of that unit change on output will be twice. Okay, if the multiplier was 5, then it means that if there's a 1 unit change in, let's say, in government expenditure, then the impact will be 5 times. Okay, so that is what the multiplier is all about. Okay, that is what the multiplier is all about. Then question F. Suppose that the government decides to increase its spending by from 250 billion euros to 300 billion euros. Find the equilibrium output, find consumption, and also disposable income. Okay, then why would the government decide to expand fiscal spending? So let me start with the last part. Why would the government decide to expand fiscal spending? So we know that this is expansionary fiscal policy because there's an increase in government expenditure from 250 to 300, which means that there's expansionary fiscal policy. Now, what we know is that expansionary fiscal policy is undertaken to increase aggregate demand and the aggregate output. Okay, but why? The purpose is to boost economic growth, right? Because when there's an increase in government expenditure, people have more money, and then there's that cycle, this one spends, the other person spends, the other person spends. So you find that because of this increase in government expenditure, the impact will be more than the increase. Therefore, the government would decide to expand its fiscal spending so as to increase or to boost equilibrium demand. Okay, it's to increase demand, first of all, aggregate demand, and also aggregate output. Why? So that we can boost our economic growth. So that is the reason as to why the government may decide to increase its expenditure. Now let's go back to the calculations. Okay, let's go back to the calculations. So I will erase this part that I can use it to solve. Alright, so now first of all, to find the impact, to find the impact on equilibrium output. So we know that initially government expenditure was 250. Okay, then it increases from 250 to 300, which means that the change in G is 50. Okay, so the change in G is 50. So now for us to find the impact, the change in Y as a result of this change in G, so the change in Y will just be the multiplier multiplied by the change in G. Okay, so therefore the change in Y will be, what is a multiplier? 2 multiplied by the 50, meaning that the change in Y is going to be 100 euros. Okay, so the change in Y is going to be 100 euros, meaning that our Y2 will just be Y1 plus the change in Y. Okay, so this means that our Y2 will just be our Y1 what was our y1? 1610. Okay, so 1610 plus the change in y. And what is the change in y? Okay, the change in y is what we're just from finding here, this 100. Okay, which means that our answer there is just going to be 1610 plus the 100, which is addition, giving us our y2 being equal to 1710 euros. So you see that because of that 50 increase in government expenditure, 50 billion whatever euros in government expenditure, our equilibrium has increased by 100. So it's not like a 50-50. The impact of this change in G on Y will be more than the 50. Why? It's because of the impact of the multiplier, right? It's because of the effect of the multiplier. So that is the use of the multiplier. Alternatively, you can find the same Y2 by using the same formula. Y is equal to C plus I plus G. Only that where there is G, initially we are putting the 250, but now you should put the 300, maintain everything else this side constant, then solve. You should be able to get the same 1710. So you are at liberty to use whichever method that you are conversant with. At the end of the day, what we want to see from you is proving that you know what you're doing. Okay, all right, yeah. And then the other part is talking about consumption. Okay, so remember that our consumption has been given to be equal to 480 plus 0.5 yd. So our consumption will be 480 plus 0.5. What is our y? Our y is the 1710 now, not the 1610, but the 1710. So 1710 minus the taxes. Okay, taxes is 70. All right, so you do your mathematics. This will be 480 plus 50% of 1640. Okay, 1640. Okay, then you add that, you add the 2. Okay, you add the 2, so this will be 480 plus 50% of 1640. This is giving me consumption equal to 1,300 euros. Okay, as our value for consumption. Okay, and then the last part for disposable income, which is yd, we know that this is just y minus t. So our yd will be the 1710, our equilibrium income, minus taxes of 70. So we have got 1710 less taxes equal to 70. This is giving me disposable income equal to 1640 euros. Okay, as our disposable income there, 1640 euros. So this is how you're supposed to do the gymnastics of national income accounting. Of course, this is the most basic form of national income accounting. Okay, so next time I'll try to show the complicated side of it, where we're just given letters without any number anywhere. Okay, and I think I'll also find time to do a tutorial on question 3. Okay, so from now until next time, I wish you all the best.